All right, let's go. Let's talk some stocks, gentlemen. What are you guys looking at this morning, Mr. Bry? What's these oil prices are going to go to 70? That's what everybody's saying. I bet you're going to say not so fast. Inflation's going to go back to 3%. I'll bet you're saying not so fast. We got a Fed meeting on Wednesday.
I think, yeah, that's more what I was wanting. Like, we have the BOJ and the Fed this week. We have 20 central banks this week. We have a shortened week in the U.S. We have the June 19th or Juneteenth or whatever we call it. That's it. How many years has that been a holiday? Is that I can't really remember. That's like a relatively new holiday.
Pretty
right?
new. Yeah.
Yeah.
Yep.
Okay. All right, so shortened week. We have a bunch of Fed stuff this week. I think that this will probably be the last week of any kind of seriousness in terms of markets. But I want to talk about real quick is that the Mythos thing news over the weekend. If you guys saw Anthropic, and Robert can chime in here because we talk about this stuff all the time. I mean, the idea that they were marketing, we have this dangerous, it's so dangerous, we got Skynet, and then it kind of was an own goal that they shot themselves in the foot, don't you think? Like, now the government's like, we're gonna take it away from you because you can be jailbroke. And it's like, well, all these models can be jailbroke. So now what does this mean for Frontier Labs? And then you had Satya Nadella, the CEO of Microsoft, come out and say, kind of walking back the Frontier Lab. Robert, what do you think about this development?
I don't know, my friend. I don't know anything about AI. We talk about it. It's impossible to know, what's going to happen. I saw a Ray Kurzweil interview, and he said agentic not for at least 5 more years, and Skynet not for at least 15 years. And he sort of, he sort of called it a long time ago. AI. He's not building leading edge models these days, but still. So, and then you have guys that think it's going to be next week. Here's what I think. I think both OpenAI and Anthropic are positioning themselves to take tens of billions of dollars from the U.S. government as an investor within the next 6 months. That's what I think. As far as to how the models are leapfrogging each other and what their capabilities are, that's way beyond my pay grade, my friend.
And what is the cost of that investment, Robert? Is the U.S. government going to have some say into what they're doing and how they do it?
Well, I think they could take it if they want. So, right? So under national security, you could probably, commit any kind of actions they would deem necessary, right?
Well,
so why not do it in partnership, right?
Yeah, no, that's a good point.
Yeah, I just think it's like basically these guys have these IPOs coming up. It's not great timing for that, right? And we as we talked about last week, Steve, when we had David Maris on the show on Monday, there was 2 price cut announcements last week. We have talked about, on my podcast and on here, talked about the fact that the price cuts combined with the price hikes is a bad look, right? They just literally took everybody up in the Q1 on the API pricing to what closer to what their probably real cost is. And, a lot of guys were balking, right? The Uber story, we don't need to run past it. We've talked about it in past episodes. But so if they're cutting prices aggressively, you just have to think about what is the actual economic model here, because it comes out that, those $200 plans, I know for a fact that I can get $5,000 of work on it. If you're like, hey, I'm going to max this out for for my window, and you're diligent about it, like, you can get a lot of extra value. Now, does everyone use that? I don't know. But like, I think that that's a big story. Today it doesn't matter, right? Like, yeah, everything's ripping higher. And I got to tell you, this guy, Trump, has there ever been a guy who could get more juice out of a lemon on the same damn headline than this guy? I mean, whether it's the tariffs or it's the war, it's just, we got a deal. Oh, we got a deal. Like 39 times a deal. And then he's still getting it today. It's pretty amazing, honestly.
and on his birthday, and announced at 2:30, right before the futures open. I mean, could you tee it up?
But
You couldn't make this shit up if you tried.
no, and he did an MOU docu-signed at the cage fight. I mean, it's just, he lived up to being a reality TV star, reality TV president. Let's just say that, okay?
Amen. Not
But on
definitely
the rest of the
definitely
market,
entertaining for sure.
on the rest of the market, I think interest rates, came down a little bit. Some of the rate sensitive stuff, our old friend Better Financial, I just saw was up 13%. So, maybe Rocket Mortgage, some of the staples, all that stuff that's rate sensitive maybe gets a little relief here. Gold has had a nice day after. Gold's been pretty bad actually for a while. Like gold's after having that great start to the year, it took a little break. And so that's on the board. The memory stocks seem to never go down. Those things are flying again. And I don't know. I mean, like, I guess you got a question like, where are we going to be?
Do you
at
fade
in the
the
back
move?
half of the year? What?
Yeah, exactly. When do you start fading this?
The stock
Do you
move or the
fade it?
gold move?
The
I would
stock,
guess-
the equity
I would-
move, and then the gold. Go ahead.
I would guess that if you really wanted to take an asymmetric fade move, like you buy next Monday or Thursday, maybe like 25 delta puts on the Qs or something like that right now. If you were like interested in taking a shot, because we have the BOJ tonight, then you have the Fed. If these guys come out hawkish, and they're saying, hey, well, we got to see, we're not going to give you anything like any bones, to the market, then you're kind of sitting on, okay, well, what is this AI story? And then what is the actual economy looking like? Oh, and by the way, some of the outer district have actually raised rates, like Indonesia just raised rates. So you could have a market kind of like get the relief of, okay, the war is finally done. We don't have to see, I mean, God forbid we see any more headlines. That just got really old in the tooth, like, right? And so that would be what I think. Otherwise, you wait and see what they say, and then you kind of assess. But I will say this, the period from, call it June 20th, June 19th, June 18th through about July 7th, historically is one of the best times of the year for stocks. Like, I used to like almost religiously go levered long stocks for 2 weeks in that period, just a various basket, but like that tends to be a good period. Even like if you look at a July 24 where we had the unwind and then we had followed by, even here on Wall Street Beats, I think this is when we still had Herb with us. We had Turmoil and Markets Day, if you guys remember that. We had like 7 guys on here in the early days of the Wall Street Beats. But that would be my guess. If you're really interested in fading, you probably wait until sometime post 4th of July to be serious. But if you were wanting to, I mean, we're at really high levels, right? I mean, right?
Yep. Don't fight the tape. Don't fight the tape.
I mean, that's the other thing. Just go ahead.
I was going to ask about. I saw a headline this morning about the Fed meeting this week and forward guidance and the dot plot, and Warsh not liking or not wanting, potentially not wanting to give any forward guidance. Do you see how does something like that matter to markets if he pulls the dot plot altogether?
It could. I always argued as a guy who's like, read the long transcripts of the Fed since grad school and I started. So I guess you could call me a Fed watcher in some sense. The dot plots was meant to be like this guidance measure, but like if you look at the residual between dot plots and realize, they're not very good, so you're just kind of like, you're like kind of basically saying, okay, well, this is where we're in support of you, market, right? We're not in support of you. So I guess you would have to say that the distribution of outcomes in the market's eyes maybe widen some, so it should be somewhat negative for it. But I don't think that would be something that like, oh my God, that's gonna take down the market or anything like that. I just think it's more like, hey, there's going to be a new sheriff in town. But we got
These
to
are the new
remember,
rules. Yeah.
Jay Powell's staying on. So, whether or not he wanted to be, doing stuff right away, he might be slowed on that until they get rid of Jay Powell later in the year. I also think you guys got to remember, with the exception of Janet Yellen, almost all these guys come in and they have to establish credibility. So if you want to think back 20 some years ago when Bernanke came in and everyone's like, oh, it's helicopter Ben. Well, he raised 16 times in a row to start, right? And he turned out to be helicopter Ben. Like he lived up to his name. But he started off. Jay Powell came out
Started out the same way.
swinging. Came out swinging when he started in 18. So much so that he got to the point where he stole Christmas, and we had Christmas Eve down 4 or 5%. And then he had to bend the knee because he didn't realize that the market really was already way too tight. So yeah, I would guess that that will be the focus of the meeting. See how Warsh does. See how the conference call does. I also think, speaking of the dot plot, Steve, they should just get rid of those conference calls. Like back in the day, the Fed didn't even give you a press release. You had to look at the money supply statistics to see what they were doing. There was more risk premium in the market for it. I'm not saying they're going to do that, but that's my personal opinion.
And he might do it. He might. All right, so the trade from you, if we could call it one, is maybe a weekly 25 delta puts on the Qs, if you want to take an asymmetric swing.
We just had the NASDAQ go up 5-6% since Thursday night. I mean, that's a big move, right? And so, if you were so inclined, on a day like this where it just popped up and who's out there offering supply, traditionally markets pay you for offering liquidity to the market. So there could be something to that in essence. Oh, we lost Steve. Robert, what are you thinking on energy prices here?
I think oil's going to settle in at 80 for a bit, 75 to 80, which is it shouldn't plunge, but it shouldn't go back to 100. Then we'll see what happens with real economic demand and also stock rebuilding demand, right? Because there's going to be two different factors at work for a long time. So I think we talked about this the last time we were together. You said, what do you think? I said, I think that oil's going to be structurally higher than it would have been, with this war and the massive drawdown in inventories. And I think people are also going to want to have more security with their supply, because this thing could fall apart in 2 days, right? So you can't pay for it as though it's a done deal if you're an oil buyer, because you got to fill the tanks no matter what. So I think there's going to be a geographical change on how oil gets to the Pacific markets, a significant one over time. And I think there's going to be a lot of inventory building. So I think oil holds, 75-ish for the next couple of years as a sort of a base. And then we'll see how things progress fundamentally as the time elapses, and you see where demand is and where inventories end up. But we weren't looking for a big year for demand before this, and at the margin, I think people were, dropping their demands, a few basis points and saying, oil demand to plunge or oil growth rate to plunge, that kind of crap. But it's in the forward curve. It's been in the curve for oil now since the war started. The market didn't pay for this as being anything sustainable. And if you want to buy oil, I think it's a hard trade from the long side from here.
And on the inflation side of that, I mean, I would be hard pressed to see corporates, all these companies globally that have raised price, be so quick to reduce it, if they ever do. Anyway, let's move on. Mr. Marston, do you have stock for us this morning?
Oh, I have stocks. I have socks. I mean, you think I was raised at Sears, the place that sold both at once. Some people don't know who Sears is. Anyway.
What's a Sears?
What's a Sears? It's why you don't buy value retailers, my friend.
Indeed. Indeed.
So yeah, a couple of names. I had put the gold stocks. I ran my screen over the weekend, and I had done the down and too cheap to be true, and with double digit revenue growth, and it spit out I am gold IAG, and it had dropped from like whatever the high mid 20s to 15, and it was like 8 times earnings, and I don't know, it seemed to be a reasonable way. It over corrected relative to the price of the commodity. So I thought I was going to do so. I did some work. I was probably going to buy a starter position. And when I woke up today, it was, and the market opened, it was up 10%. So it's 18 and a half. And when my screen was 17 and I circled it for the first time at 15, 16 and change. So it's like, it's already up 20% from when I first caught my eye. And, now that I was getting comfortable doing the work, it looks like it's an interesting idea. I don't own any gold. I don't own any gold stocks. So if I wanted to get access, I might end up pitching I am gold on this show at some point. Okay, that's number one.
Okay.
Number two is SimilarWeb. Data as a service company. So we remember that being a kneecapping fiasco under SaaSmageddon. I always contended this was a data as a service provider, not a software platform as a service provider, and that they contend that AI is going to be we have some serious wind out here in Philly. That AI was going to be a tailwind and not a headwind for its business. And today they announced 2 3-year contracts combined for $48 million in revenue over 3 years. Now they're a $300 million business, and these contracts were high single-digit millions. So if you do the math, 48 divided by 2 is 24, divided by 3 is 8. So they're basically roughly $8 million contracts for 3 years for 2 large enterprises. They did not say they were LLMs. Their the contracts are supposed to be 8 figures, north of 10 million when they come. But if enterprises are locking into paying this much money for this company's data, it seems like they might be right, that the world's not going to end. These are some of the biggest contracts that this company has ever signed. And it's happening when, in theory, AI is obliterating the value of their service. Because why else would the stock have gone to 2?
Right.
A while ago, right? Why would it have gone to 50% of sales when software I bought it big at 1.5 times sales because that was my formula for 30 years. Buy software stocks when they go to 1.5 times sales. You always get them bought out at 3 times sales or 4 times sales. So I got smoked in this. I'm getting much closer to break even since I averaged down, but still, it's been a painful ride. But that is very good if you own SimilarWeb.
So did you buy it down, or you just kind of?
For me, down is
for the record.
Yes, for me, down was around here, slightly above here.
Okay.
So
I think I got some with a 250 handle.
Yeah, I didn't have any. I did that in a 450 handle. And at some point, you just stop buying down because it becomes the original investment. You have to remember, when this went from 17 to 8, I started buying it. So my first purchase was 8.
Okay.
And my last.
So you still like it here? If you didn't own it, would you buy it?
I would have. It's still only 1-time sales now. It's the market cap is around 380, and there's about 50 or 60 million in cash. So and the sales this year are 315 or 320, something like that. So you're at 1-time sales. I don't
just
know.
Size it right.
Yeah. I wouldn't have a standing on my head and spitting nickels kind of position for sure. I wouldn't go all in.
No. Okay.
It's been a good stock for the last couple months, though.
Well, it's more than doubled off the bottom, right? But you still don't know, how this this intermediate term business model plays out with AI. And they're always gonna the software stocks now that they're not imploding, unless they start growing strongly. If you're growing 20 or 30%, you can say CAI isn't going to kill my business. If you're growing 10% or 8%, one more hit to your growth rate in your low single digits, mid single digits, that's no bueno. So I think it depends what your growth rate is and convincing the street what your terminal value, could be, right? So your multiple. So that's where the risk is in these things. That at any one point and on any one new model release, that they drop down a plugin that gives you access to all kinds of data acquisition capabilities that didn't exist heretofore, right? So
So
how do you value that?
yeah, and I guess the question I have for that is, what is it that you would think would convince the market, right? Like, because there's a high degree of uncertainty of how this all plays out, as we've discussed, and what would it be to like say, oh well, I guess put it this way, like, oh, the true cost of these things is well above what the price is. How long can they run this model? They're going public. Will the market just give them runway forever? And is there actually an ROI? And if it's not, then maybe the software model of per seat, ARPU subscription, without the volume based pricing, has a place where there's a symbiotic world of, hey, the LLM is valuable, but we need to learn how to use it and not just think it's the new Google search where you can use it unlimited, because the true cost is just not there. I don't know. What would you think there would be that you'd look for something like that?
Well, in this business, that's why I alluded to growth rates, right? So if you're Palantir and you put up a 50% growth rate, you're safe, right? AI is not changing that business model, not in the short run anyway. So some of the database companies, right, had put up 30-40% sales growth. There's been a handful of software stocks that have worked fundamentally and haven't had the slowdown that a lot of the obvious platforms, like Salesforce.com have had, right? So if the growth rate accelerates for these guys and they say, see, it's turning into one of our biggest businesses, the stock market would double this stock overnight. On the downside, if you saw the net retention starting to erode well below one, because they have a huge RPO, remaining performance obligation, right? So they're going to have a backlog that they're going to work through. They're never going to plunge their revenue in any one quarterly period, right? But over time, if the net retention starts to decrease and erode, and it goes from around 1 to 0.95 to 0.90 in the next 2 quarters, or something, they'll probably lose less than that, half of that. But a bit every quarter, and starts to stair step downward, then you would say, yeah, there's a lot of business that's running off, and these guys aren't replacing it, so the model has been changed. And I think the street, if it saw that 2 or 3 quarters in a row, would get very concerned.
Yep.
Yeah.
All right. So for people that are new, Robert, what's the ticker?
SMW,
is that right?
SMWB.
SMWB. Okay. All right. Anything more before we wrap, guys?
That's
Yeah,
it for me.
I think that just in general though, it feels as though this market is in a place where people don't really want to short it, and they also are concerned. So it's a weird spot we're in right now. I mean, I think it's more going I think Robert's strategy of like single stocks, know what you have, like you can really get behind it. And even on the short side, I think not all of them are made equal. So I think it is really knowing what you want to like position on and getting as close to the premises of the thesis, and then what is that going to get you in an overall market like condition that's uncertain but at all-time highs is a good way to think about it. But we have the midterms. I think that once we get through this week, that will be the most obvious thing. That and the OpenAI and Anthropic S1's coming out, and then eventually those deals, and we'll see how SpaceX trades. By the way, just last thing in SpaceX, not bad deal. I was impressed that they were able to get that thing done and have it trade that well. You know, kudos to the bankers.
Kudos.
Well,
I agree.
it's day 2, but I agree. Kudos to the bankers. See how long they can hold it.
Yeah. No, I mean,
All right,
look, you gotta
gentlemen.
remember 20. Okay.
No, go for it.
No, I was just gonna
What
say,
were
you
you
got to
gonna
remember 20% of the supply is gonna be able to be released by June 30th. So you will see. That's what is that? That'll be $400 billion of stock that's gonna come out to the market here in 2 weeks. So I think that will be the first major test, and they will have the
That was
passive
the
guys like pick up some of the stock. But remember, the S&P
Yep.
is not in on that, so that's 19 billion that won't be there. But again, 400 billion, that's a lot of stock.
Yep, that was the first gate to not be classified as a flipper, and for you to not get allocation to IPOs. So you've got what 2 weeks to hold it.
Yep.
All right, gentlemen, good show. Thanks for following us on Wall Street Beats, Ben. As always, I love the hat. We'll be back here tomorrow.
Einstein Energy, baby.
WallStreetBeats.com. Come check us out if you haven't. We've got a great content behind the paywall, and yeah, Einstein Energy. Those bars don't suck, huh, Ben?
No,
They're pretty tasty. They're pretty tasty.
Yep, they're pretty good. All right, guys, have a great day. Everybody else, have a great Monday, and we'll see you back here
Thank you,
tomorrow.
guys. Yep. Thank you, guys.
Hey, Robert.
Thanks, guys.
Yo.